price cap, what does it mean to you? Well, I think the eyes on the prize have probably in the last few weeks have been rightly. We've been looking elsewhere following the death of Her Majesty, but obviously the world is waking back up again through this period of mourning, and we're seeing things like the consumer price index at 9.9. We've seen sort of labour markets being squeezed again, and we've seen the trade in fuels driving UK exports and imports in July, and we've seen the challenge on GDP through the last few times as well, and we've probably seen, and I guess that's where this event is derived from. We've seen the Chamber, for those who are with us regularly, will know that we are lobbyists, and since April and May, we've been challenging the government around the escalating fuel prices, and we asked back in April for an emergency budget, and I think we're going to get one of those in October. But is that really fueled by the change in Prime Minister? Who knows? But we're on the case, because we do understand, particularly for business in the coming period, there are some challenging times as we head into winter. That's enough from me. Let me introduce to you on our screen, and they're all over the place, but we got from Fidelity Energy, who I guess I've been quite fortunate personally to know in the last 3 years, because both John Haw on our screen and Russell Downing, who I think you probably tripped over at a lot of events with my good self. They've changed the way that sort of business has procured their energy over the last few years, and are one of the UK's leading utilities and energy consultants. So pleased to welcome Russell and John to the meeting this morning, and your good selves. But as a reminder, any questions that arise, pop them in the chat box. But once John and Russell have finished talking to us, then I'm going to hand over to you. Think of those questions that have been burning through. John, over to your good self.
Thanks. Good morning, everyone. I hope you're well. So I thought I've got a few slides with you I thought I'd share, just to sort of show you the kind of position that businesses are finding themselves in. I think we all assume that everyone understands just how bad things are, or going to get really for businesses in the next few months. But rather than assume that you know that, I'll hopefully be able to share my screen.
Yeah, it works. Yep.
You can see the energy market bit. Yeah.
Yes.
Great. Sorry, just I've got 3 screens open, and it gets a little confusing. So to go back to how bad the problem is, this is, these lines don't really do themselves justice, because a year ago those lines would have taken up the whole graph, and there would have been huge variances between sort of £28 a megawatt, which is the lowest price that we saw during COVID back in 2020, and obviously where the current market's at, which is about £400 to £500 a megawatt. So let me put that in perspective. If you bought your energy from us back in 2020, you'd probably be on a 15p tariff fixed for 3 or 4 years. And if you've done that, well done, happy days. You don't really need to worry about this forthcoming energy crisis. If you haven't, and you are on a fixed contract that's coming to an end at the moment, you're probably looking at prices of around 60p per kilowatt, so at least 4 times higher. We were seeing prices at £1 a kilowatt only a couple of weeks ago, but the market has started to come off a bit, which is a real relief for everybody. And gas is pretty much exactly the same. And people often say, why is gas and electricity so linked? And the answer to that is we make 42% of our electricity in the UK is made by burning gas. So we use a lot of gas, and obviously the price of electricity and gas is traded on a global market. So that's the real problem we've got, and that's one of the challenges the government are trying to look at, which is decoupling the price of electricity and the price of gas. So wholesale prices, are up. It was down at 28, 38 pounds a megawatt. We're now looking at 450 pounds a megawatt. So the way that we buy and trade energy is we buy it in periods, basically. So this is your month ahead period. This is your winter 2022 here. Sorry, then you got summer 2023, winter 2024, and you can see prices are widely forecast to come down over the next few years, but currently they're very, very high. So one of the questions we get, if we sign a 3-year contract today, it will be significantly cheaper than a 1-year contract. And the reason it's significantly cheaper is the traders believe the market's going to come off. And we've seen these big spikes. This big spike, when it was spiking, I was saying to my clients, just hold your nerve. Don't do anything. We don't need to do anything yet. We'll wait and it will come back.
Could you press?
Oh,
Someone's got a cat in the room. You wouldn't mind putting yourself on mute if you wouldn't mind.
Excellent. So as you can see, it's a pretty serious increase. So if those of you that aren't aware, it's coming and it's pretty unpleasant, and it's going to make a lot of pain for a lot of businesses. What are the causes of it? So you'll probably know most of these because it's been in the news constantly now for about 3 months. So we're still heavily reliant on burning gas in the UK to make our power. Wind and solar are great when it's windy and sunny, but when it's not, we are well short on the grid. So we burn gas, especially in the evenings at night, to make enough power up. Usage rebounded far quicker in Asia than was predicted after COVID. China especially, but also a number of other Asian countries really have started consuming gas at a rate of knots since the end of COVID. You've had things like droughts in Brazil and Germany. Brazil was pretty much 100% hydro. They've had a massive drought for the last year, and all the hydropower stations have turned off, so they've had to go back to burning gas. We've had a number of unplanned outages in our interconnects with France, a fire in a big terminal in America that took out the LNG pipelines, and less wind. So all of these things have really it's caused a perfect storm. And then add on to that Russia and what they've done with the Nord Stream 2 pipeline and the weaponization of the gas coming out of Russia. You really have got a perfect storm, which is why the government is being forced to intervene. I think if the government doesn't intervene, it will make the amount of businesses that went bust during COVID look like like a storm in a teacup. This really is it's quite heartbreaking actually for some of our clients. They are shutting factories, they are shutting hotels, they are literally turning the lights out because they just can't afford to run the businesses at the prices that they're being forced to buy at. So one of the things that the government has said is this will not be a retail price cap. So this is not going to be like in your home bills where you are on a retail price cap and it can't be more than whatever it is, 35p. A wholesale price cap is being mooted in business, and that's quite important for a number of reasons. It will bring down the cost of bills, but it will not limit the amount you're paying for your bills. So one of the things we find is that some of our customers have gone onto these out of contract rates, which are up at about £1.50 a kilowatt with some suppliers, in the hope that the government will step in and give them enough comfort and ease to sort of, effectively cap the price at whatever they think the price cap's going to be. Well, that's not going to happen. And the government will not be paying £1.20 a kilowatt to get you down to 30 pence a kilowatt. It's just never going to happen. They couldn't afford to do it. So we're already seeing some muted numbers coming out of the BBC and people this morning around what we think will happen. I wrote these for a slideshow I did last week, but what they're saying is the cap is rumoured to be 21 pence for wholesale. Now that's just my reading of that is that's just for the energy costs. So on top of that, you've probably got 15p of transmission charges, taxes, all the other things that make up your energy bill. So I reckon it's going to be sort of 36 pence, something like that, and that will be on the wholesale price. Now, what they haven't said is what the maximum support will be, and I don't think there's going to be enough. What they're talking about is a difference between 21 pence where they think the market's at and 28 pence where they think the market's at, and a 21 pence cap. Well, the market isn't at 28 pence. That's wildly inaccurate already. It's more like 45 pence. But there's going to be some support, whether it's 7p or 15p or 20p. It will be of that magnitude, I believe, and it will come off as a discount on your bill. And it will come off your discount on your bill, whether you're paying £1.50 on out of contract rates or whether you're paying 50p on a 1-year fixed term contract. So that's how I think they're going to fix it. And if they do it like that, it's actually quite a good idea because we'll give support to the businesses. but it will make businesses still take charge of their own strategies on energy. It will make businesses still invest in things like solar and renewables, which we're heavily investing in ourselves at the minute. It allows suppliers to fix and hedge the contracts that are being written. If you're on out of contract rates with suppliers, they literally have no idea what you're going to do or what you're going to take or when you're going to move, so they can't really buy and secure your energy. Of course, it will continue a free market, and then finally, it enables all of the other people that work in these industries to survive and operate. The retail price cap, as you saw in the domestic market, killed something like 20 odd suppliers, because while they did a retail price cap, the government didn't offer any support to those suppliers to fix their broken cost model effectively. So that's whistle stop really, but I think probably more than happy to just open up for questions really and see if anyone's got any questions, or perhaps if you've got any experience currently with how it's impacting your business or decisions you're having to take. It'd be quite interesting to hear.
Maybe I could just start the ball rolling, John, just picking up on your point about coming off contracts and those who are just floating along. So if somebody is fixed a contract, say in July and August at the higher level commercially, are they stuck in that contract?
So they are. The answer is yes. And the government have said in a number of the releases and leaks that we've seen that any business that's signed a contract since April will be supported. And if you remember going back to my slide, April was really when prices took the dramatic turn upwards. Just looking here. Yeah, I mean, in April, prices were about £100, £150 a megawatt, so significantly lower than where they are now. And they have said that it will apply to all contracts that are written. So they're really going to encourage people to either get into contract, and you can't break energy contracts once you've signed them. They just won't let you go.
No, that's fair enough. Yeah.
I'm ex-telecoms, and in telecoms you can break your telecoms contract and do what you like, but you'll get chased legally for it. In energy, the suppliers just won't let you leave. It's as simple as that. So it's a very different market in that respect.
Okay. And presumably, if people are taking out a 3-year contract, and does that, looking at those forward rates, does that contract reflect what you're seeing in those forward rates? Yeah,
let me share my screen again. I was a bit too quick then turning it off. So hopefully you can see my screen. Can you see that?
No, not yet.
Still thinking about it.
Yes.
I think my laptop,
there we go.
Steam power, it's a bit tired.
So John, we're looking at it now. It's good.
Great. So this is the important point here. These are effectively the contract prices for a 1, 2, 3 or 4 year period starting from October. So if you were to sign a 1-year contract, you would pay an average of £407 a megawatt, which is about 40 pence plus all the taxes and plus all the profits on top of that. So you'd be looking at anywhere between 65, 70 pence a kilowatt, maybe even slightly higher. It really does depend on a daily basis. If you sign a 4-year contract, you'll be paying 28 pence plus the other bits and bobs. So more like, I don't know, mid-40s probably. So that's because the market is predicted to decrease as either we get more control over our supply, or perhaps the hope that there'll be some sort of peace in Russia and Ukraine, or the fact that we will be out there pushing hard on the LNG terminals and deliveries to secure as much gas as possible. So I think one of the things, lots of people, and it really is frustrating for us, but lots of people say, oh, I'll leave my contract until the month before to renew it, or oh, I'll leave it, it's not out for another 6 months. What we do for our big clients is we pick the timings of when we procure for them. If you just leave it till a month out and you think that's the right strategy, unfortunately you've got nothing. You can't outbeat the market. It's going to be what the market is. If you've made a decision, let's say we made a decision in January for some of our big clients to start looking at procuring, we procured in April for them, way ahead of their contract starting in September. They've now probably saved 200% of what they would have paid. And that's what we do for a lot of our big clients. So during lockdown in 2020, we had a really good year, because when energy prices hit £28 a megawatt, they were giving oil away for free in America. They just couldn't get rid of it quick enough. And we said to our big clients, we don't think there's going to be an opportunity like this ever again. We think you should fix and fix for 5 years. And some did. In fact, a lot did. And they're very, very relieved that they did. But, you know, if they didn't have the advice, if it wasn't brought to their attention, they would just have waited until 3 months before the end of their contract or a month before the end of their contract to look at it. And that really is not the right strategy. We need to be proactive. Yeah, and now perhaps more than ever, you know, I do think the market's going to continue to trend down. It's been trending down quite quickly the last few weeks. And then I think we've got a lull now between perhaps now and November, where we'll see prices stabilize slightly. And then really, you know, it's all bets are off for the winter. If we have a cold winter across Europe, a cold winter in the UK, you're going to see prices rearing back up again. And of course, the other unknowns are what's going on in Russia, whether that escalates, de-escalates. These are the things really that are going to control the markets in the next 3 months.
Okay, thank you for that. James Clark from 7Y Energy. You got your hand up, James.
Morning, everybody. Yeah, thanks, John, for this. That's really, really helpful. Latest news this morning, as I wake up, is that Mr. Rees-Mogg is going to make an announcement later today about what the support is going to look like for businesses. They sort of talked about an equivalent support, didn't they? But it looks like it's probably going to be 6 months of some sort of some sort of business energy price guarantee. Is that to smooth that? I'm looking at those numbers on your wholesale screen. Yeah. November and Q4 in general this year is looking terrifying. Is that going to smooth that down and therefore maybe change those 1 year contract projections that you're looking at?
James, great question. And the honest answer is right now, we don't know. It's not, let me correct one thing though. It's definitely not going to be a retail price cap. So there will not be a price cap. It will, in the way that we think it is. It's a wholesale price cap. So for example, you know, your wholesale energy company, I don't know, SSE, for example, they will be paying these prices for the wholesale. So this is 53 pence a kilowatt. Yeah. And they're saying they're going to cap that at 21 pence. If they do that, then happy days. But the BBC, again, the BBC get this wrong all the time. It's very frustrating. They said that the market price is 28 pence. Well, it isn't 28 pence. It's 28 pence on a 4 year contract. It's not 28 for 1 year. So if they cap the market at 20, say they cap it at 21 pence, that's £210 a megawatt. That will flow through as a 33 pence discount on your bill, and that would be massively beneficial. And that's probably not far off where I think it should be. But what it won't do is it won't cap your bill. So if you're on these out of contract rates at £1.50 a kilowatt, then you're still going to be paying £1.30 or £1.20, whatever. So £1.15, sorry. As opposed to if you enter, say, I don't know, a 1 year or a 2 year contract. And we're finding a lot of our clients are actually taking the 3 year contracts at the minute, even though they know the market could drop. I mean, it could drop. It might go the other way. We literally don't know. What they're saying is they just can't afford to pay the 1 year price. So it'll be interesting to see what level of support the government set this at.
Well, if it sounds like it's 6 months as well, it really is just isn't it? Like you've got to get back together again next year, middle of next year. So yeah, okay.
Yeah, there's also been some rumor that very successful businesses won't benefit. But
I was going to ask that question actually. Is this going to be targeted at the small businesses and those that don't have such capital or such ceiling space? But that's still going to impact everything in the economy, isn't it?
I think they'll probably won't do that. I think morally it'd be a nice thing to do. I mean, why would you give Google a discount on their energy bill, for heaven's sake? But practically rolling that out in a timely manner, you'd be looking at months, and you'd have to look at. I mean, there's 4 million SMEs or 3 million SMEs. I'm sure you'll know the numbers better than me, but how on earth would you process 3 million application forms with the government in the position it's in? So I think it will be a blanket wholesale discount off the bill, but it will not be a retail price cap, and that's a really a big difference.
Of course it is, yeah, and I mean that will affect everybody rather than including those in contract. Is that what you're saying?
So this is a good point again. So it will affect if you signed a contract since April, you're probably paying 40 to 50 pence So
Yeah.
you will get some kind of relief, probably not as much relief as if you're paying 90 pence, I would hope, but I don't know. I mean, they'll probably say you've got to cap the wholesale price at, say, 21p, and the wholesale price back then was, let's, for example, say 15p. So you might only get 6 pence of relief. If any contracts signed before that, and this is the bit that we were really keen to understand, you know, the most important thing is that our customers that are paying 15p until 2026, those contracts have got to be honoured and have got to be left to stand, and they absolutely will be. So anyone before April probably won't get any support, probably doesn't need any support. Anyone post April will get some benefit from this, and I imagine it will be based on the difference in, you know, the wholesale price at which your contract was sold at and the current wholesale price versus the current cap. So yeah, people that, for example, bought here will probably get more relief than people who bought here.
Yeah.
Rightly so, because their prices on the wholesale will be much, much higher.
Okay. Thanks, John.
And an interesting thing with the commercial cap that we're talking about is it is only for 12 months, isn't it?
6 months.
6 months, is it?
6 months,
just the
and
winter.
potentially another 3 for vulnerable businesses like pubs, retail.
Okay.
Like, you know, what's a vulnerable business? Where do you stop the classification of that? You know, you could say high energy users, manufacturing, but definitely it'll be hospitality, hospitality and pubs, etc.
And of course, 6 months doesn't allow much time for planning, does it really? If you don't know what the world is going to look like when you emerge in April.
Yeah. So I've just got a question in the chat box from Lisa. The domestic price cap essentially killed competition for fixed contracts for quite some time, with no difference between what suppliers are offering. Do you think this will also happen for business tariffs, or is there sufficient room in the market for competition? Lisa, it is the question I've been waiting to have answered for the last 2 weeks, because clearly my business buys and sells energy contracts. If they was just all fixed and no one bothered to take out a new one, it would be a pretty tough time for us for 6 months, that's for sure. I'm confident, and I have it on pretty good authority off the record from a number of the big suppliers, that this is a wholesale cap. So the wholesale cap will be a discount on whatever contract you agree, but you will still go out and you will use people like us to compare the market, get all the different prices from the market, and those are retail prices, not wholesale prices. So I'm sure you'll still see a spread of risk between, I don't know, let's say 50p and 60p perhaps, and then on top of that you'll have the same discount applied whichever one of those you pick, you know, i.e. the government support element. So it will continue to operate in a free market. You'll be continually pushed and encouraged to switch and find the best deal yourselves. I mean, that's absolutely what they're trying to do. They're trying to get businesses to take responsibility for this as well. Yeah, and it won't be the same as the domestic cap, simply because the business market doesn't function like that. And why would the taxman pick up the difference between £1.50 a kilowatt on an out of contract rate and say 50p a kilowatt on another kind of contracted offer?
Lisa is acknowledged, so thank you for that. Anyone else got any questions they'd like to throw in, or observations they'd like to make? I mean, one thing that again I'm unsure of, I'm with the energy market, we're likely to see the strong talk of quite a large base rate increase coming up. Is there a correlation in what you're seeing in the market movement to the way that base rate and financial markets perform, John?
Oh, yes.
Yeah, thank you, Rob. I knew you'd answer that one. Yeah.
Well, I look at, I obviously, from the point of view of my interest, I look at this from the macroeconomic point of view and what effect on macroeconomics this might have. And there are 4 areas of interest. One is obviously inflation. The other is the potential for recession. The other is the effect on government borrowing. And the other one is the effect on the financial markets. And all these will impact to some extent, and to some extent in a positive way, not a negative way. I think it actually is going to have the effect of reducing the inflation rate. And I think we could see inflation towards the end of the year peak at around 10.5%, coming down to an average throughout sort of 2023 of about 5.4%. I think it will also probably have the effect of keeping us out of recession. but of course it all comes at a price from the point of view of government borrowing. And I actually look at this as the big short. Effectively, the government has shorted the energy market. I'll explain what I mean by this. It comes at a cost to taxpayers of around 150 billion, depending on how wholesale gas prices behave over the next 2 years.
Yeah.
It could very well be above that figure, depending on the difference between the cap and the wholesale price the government is committed to passing on to consumers, or not passing on to consumers, I should say. Therefore, the government is exposed tremendously to the risk of unquantifiable liability because of the price guarantee. Even without being further exposed at these levels, we're looking at probably expected government borrowing to reach around 9% of GDP between 23-24, and servicing that debt during a period of time when interest rates are rising. I'm looking at the impact on potential rises in interest rates as a result of this, and I think they will peak at around 3% at the end of the year. There is a potential between the end of the year and the end of the first half of 2023 to move to 4%, although I think that might be undershot. I'm looking.
One question for you. There's a number of economists out there that fundamentally disagree with increasing interest rates at the moment, because the inflation we're seeing isn't driven by a boom market, consumer spending, all the rest of it. It's because goods are in such short supply. It takes 2 years to get a Range Rover. It takes 2 years to get a Rolex. Energy prices are through the roof. It's not being driven by overconsumption. It's being driven by undersupply because of things like the war and the shortages, and shortages of microchips. I mean, to get a new car now is an 18-month waiting list for pretty much anything other than a base car. And that's what's really been pushing up prices. It's not particularly been the sort of uncontrollable consumer spending, and we're being forced to pay this. And a lot of economists are saying that increasing interest rates now actually would just make everyone poorer, and they're still, the people that are buying the top end cars and Rolexes are still going to buy them. They're not going to be bothered by a rise in interest rates. But actually, the real middle are going to get squeezed significantly on all fronts, especially those with mortgages, obviously, if the interest rates go up. But there's a number of economists out there that just don't believe that it's going to have the desired impact. It'd be good to understand your thoughts on that.
I'm not going with the herd, let's put it that way. I do think there is some significant impact. You also have to bear in mind the fact that the government, the Bank of England rather, has increased interest rates partly, not just because of the external influences on the inflation rate, but also because it left monetary policy far too loose for far too long. It took far too long to unwind the QE program. And that has expanded money supply, which in itself is inflationary. So we actually already had underlying inflation before this catalyst hit the market. So there is that factor. So implicitly, I mean, the government has taken a position on a fixed price relative to a market price and faces a margin call, effectively, if they should diverge. So that's why I say it's a big short. But it does have that impact, and government borrowing, of course, will have a potential impact on the financial markets, as you're likely to see quite a lot of gilts come down the tubes, be flooded into the financial markets in order to pay for this. And at the same time, you've got the Bank of England unwinding their QE program. They've already pushed 90 billion into the market. In terms of gilts coming back onto the market, and who's going to buy these. So there could be quite an effect on market rates as opposed to base rates. And market rates could well and truly overshoot the potential for base rate increases effectively. So that's the way I looked at it from a macroeconomic point of view. And if anybody disagrees, they're welcome to it.
John, any thoughts arising from Bob's comments?
Well, I've discussed it with Oxford Economics and also economists at St Paul's University. So,
and you and I have had that conversation.
And we're pretty much on the same page. Yeah, we're pretty much on the same page, tending not to go to the herd with the herd, but to look at the potential impact and the way we see it working. So there we go. Anyway, that's my point of view.
No, thank you. No, I'm very welcome, because that's what it's all about. John, any thoughts arising from yourself?
No, I think yeah. I mean, I think all we know is there's going to be lots of uncertainty, don't we? The big short is absolutely correct. Robert's crystallized that perfectly. I think the only good news on the big short is that the government does have control of energy policy. So I'm hoping that with a bit more diplomacy, and if Biden starts to play ball, Biden could ship us an awful lot of LNG over the next couple of years, which he started to do when Putin first started misbehaving. But Biden seems to be playing his own political games at the moment with mistrust. So our biggest ally is not really playing fair, is he, on the trade talks that we were hoping for? Because he's obviously got his ambitions and thoughts on Ireland and the Brexit thing. So yeah, I think there's lots of uncertainty. I think the government will start pouring more money into onshore, North Sea investment into producing our own gas. That's not cheap either.
I agree.
That's definitely not cheap, but it certainly will limit their liability slightly and their exposure.
Yeah.
And we do get, most of our gas comes from the North Sea. The rest of it, bulk of it, comes from 40% comes from a pipeline with Norway. So we probably ought to be making real good friends with the Norwegians at the moment. And then the rest comes from LNG cargoes from USA, Qatar, Saudi, all the other kind of places around the world. Australia, we started to see some coming in from. So I think it needs a huge diplomatic effort as well as a huge economic effort to sort of de-risk the big short. But unfortunately, I think we're all going to pay for it, and I think even businesses. I'm really curious to see what level of relief will be at. But I think I've got a sneaky suspicion it's going to be lots and lots of flashy lights and bells and whistles and big headline numbers. But with the impact you actually see in your bill, my fear is it's not going to be enough, and it is going to. You'll see some businesses really start to struggle. Put it in perspective. I've got a local co-op store that we work with, and their bill's gone from about £1,000 a month to £7,000 a month. That's for a small local co-op store. I mean, how on earth can they pay that? I mean, it's just going to be crippling. And I think the government relief will probably be a couple of £1,000 if they're lucky, but it still means it's £5,000 a month. You've got to sell a lot of ice and a lot of ice creams to pay a £5,000 a month energy bill. And I think the problem for hoteliers is even worse, because apart from the last few days in London, the hotel market is fiercely competitive, and they all try and keep high availability. So therefore they need to sort of relatively keep the prices down. But again, their bills are going up 500%. And you talk about another couple of million quid a year for an average size medium hotel that might be making £300,000-400,000 a year profit. So the economics just don't work. And I think those sectors where the government have targeted, they said they will give extra relief. I just hope they do, because it's pretty wearing actually going home on a Friday night at the minute. I just spoke to one of your customers for the last 7 years. He's talking about shutting a wool factory in Wolverhampton because they just can't afford the cost of the energy. So we'll wait and see. But I hope it's enough, and I hope it's quickly delivered enough, and then backed up by government policy to sort of solve the longer term problem.
Sorry, Bob, you're going to say.
Well, it's sort of on the back of that, really. I mean, there is going to be a huge impact on certain areas of the economy, and particularly the hospitality industry, which is going to suffer tremendously. We're going to see quite a change in landscape, I think, over the next couple of years. It's already changed as a result of the pandemic anyway. But this coming on the back of the pandemic, I mean, it's almost like a perfect storm. It comes on the back of the pandemic, and that's going to cause even more hardship and difficulty within the hospitality sector, travel sector, and so on. It is going to change the the industrial landscape in this country. I don't think there's any doubt about that. We have to see how it all works out, really, and time will tell. It's a bit pessimistic, I know. It's not all bad news, but it's a fair amount of bad news. And Putin's been on the TV again this morning, so we're not helping in the slightest, and likely to. I mean, I haven't seen whether or not what he's been saying this morning has had on the impact on energy prices in the market, but I've not really seen that this morning yet. But I mean, it's likely to push prices higher, if anything, as he's just continuing with the dangerous rhetoric that he continues with. So that's going to have an effect on wholesale prices, undoubtedly. So it's all very difficult.
Yeah, I don't know if James Clark is still there, but I know you go out and Lisa as well. You're advising businesses face to face around different energy provision and grant provision. Are you seeing any uptick in the sort of requests that you're getting, and people are considering different ways of powering their business?
Yeah, I mean, we are. So we run the Target.
James is from 7Y.
Yeah. I'm from 7Y Energy Agency. So we're a charity and non-profit, and we at the moment run a program called Target 2030, which is a business energy efficiency support program. And of course, that. Depending on the type of business, usually we're dealing in the realms of helping businesses sort of identify 20% savings on their energy consumption, which of course translates to 20% savings on their bills, etc. Of course, that still feels like a bit of a drop in the ocean at the moment, because all of a sudden energy efficiency measures are, yes, they're making a big difference, but if you can't afford, if you can't afford your bills by a factor of 50% anyway, you're gonna struggle to see that sort of thing. But the last couple of years, I mean, we've pretty much drained our grant pot. We had about £1 million to spend in Swindon and Wiltshire, on just short of on energy efficiency measures that we could help grant fund. Be only paying 30% of that cost, but we have still seen massive interest in that, and as a result, we're having to run basically a waiting list for more grant funding to come in for people who want to install energy saving improvements in their businesses. So for factories and things like that, sometimes it's process equipment, as well as identifying simple ways in which they can change the hours that they work, or they work a bit smarter, or they use sort of low cost ways of managing their energy use a little bit closer, similar to the sort of advice that we would give a domestic customer in their household of trimming the fat around the edges. But these days it's not just trimming the fat to reduce waste, it's actually to keep head above water, and so the last few years we've spent particularly on things like solar, of course, have been popular, which we're grateful for, because it means that a number of businesses within the region are obviously seeing that investing in their own generation is a long-term way of reducing their bills, and hopefully it will help them weather this spike a little bit. We're often in the hospitality sector as well. We spend a lot of time in pubs, personally as well as professionally, but that is the territory.
Someone's got to do it, James. You're just the man for the job.
Yeah, I mean, somebody's got to do it. But of course, there's ways and means in which we're having to protect some of these types of businesses, and the conversation is not so much, oh, wouldn't it be nice if we saved a little bit of energy on our overheads, or wouldn't it be nice if we lowered our carbon footprint? It's very much more about how do we stay alive during this period of time. So we're offering free to SMEs in Swindon and Wiltshire. We are offering free energy surveys, so we can speak to you about that if that's of interest to you and your business or those that you work with, and that at least gives some recommendations and some ideas about where you might be able to save. So yeah, we are available for that until June next year. So
Yeah, thank you, James. That's useful.
B&Q are doing very well. Sorry, did you catch that? B&Q are doing very well.
Oh, they are. They've got a
Their
lot out of me as well.
That's through the roof.
That's why I've got a gash on my head, is because I've been at B&Q and up in the loft this weekend. So yeah, they are doing very well on that.
Has anyone got any further questions they'd like to pose to John? And I'll call it a day, if that makes sense. John, have you got any final thoughts you'd like to share, or a summary of where you are today?
No, I just you know, by all means, reach out to us if you need any advice or assistance. We'll be analysing what the government say. I think there's already talk of it being delayed till Friday now, which is frankly slightly annoying, but these things happen. So yeah, once we've got that sorted out, we'll probably hold a webinar for all of our clients, just to sort of give them the you know, give them the input, where we think it's going to impact, how much it's going to impact, and yeah, what the best way to mitigate risk over the next few months is.
Perfect. Thank you, John. If you want to, if that's a webinar that you want to share with chamber members in terms of the things like that, then we're happy to share it with business across the region. So do let us know on that one. In terms of what's next from the chamber, hoping that you can join me on the 7th of October in Swindon, when actually I'm holding one of our networking style events. Already got about 30 or 40 people booked on to that. So if you'd like to come and join us, though it's in Swindon, I would say to Catherine in West Berkshire, you don't have to be in Newbury to come and join us. And I know Russell is coming as well, so opportunity to test everybody within Fidelity Energy as well, with updated points of view. On the 18th of next month, we've got our quarterly economic survey output event, and we'll actually be joined by the Director General of the British Chamber of Commerce, and she is the lady Siobhan de Havilland, who goes and should we say goes along to Downing Street each week to lobby for business. So she'll be sharing some thoughts with us, and for those who have liked what Bob has said today, he'll be joining us on the panel as well with his thoughts and observations. So that's on the 18th of next month. It's going to be in Reading. So for those who are not in Reading, I'd point out that actually we're going to have it in the BDO offices, which is literally 20 yards out of the front of the station, the railway station in Reading. So it's a really easy get to, and a bit of half an hour of lunch as well. Food, who knew? But it just remains for me to say thank you for all of you for joining us this morning. This will be out on the YouTube as well, so because John has been through very much great, insightful information. So thank you for that. I think we are in for a interesting winter, to say the least. But let's be positive about everything we hope for in the coming months. It just remains for me to say good morning, and I will see you all again, hopefully in person or through the screen in the coming weeks. But thank you ever so much, John. Thank you, Russell. Fabulous. Great content.
Thanks a lot. Thanks, everyone.
Thank you very much.
See you soon.
Thank you.
Thanks. Bye.
Thank you, John.